Let's talk a little bit more about the Canadian market. Sadiq Adatia joining us. He's CIO at BMO Global Asset Management. Sadiq, how would you characterize what you're seeing in the markets right now?
Yeah, I'm still seeing a bit of nervousness in some sense, but still a little bit of caution across the board. There's no doubt that markets still are pushing higher up and investors are rooting for the markets to go higher. But there's still a little bit of undertone in my mind of nervousness. And you can see that because of the breadth of the markets. Only a handful of names really are driving markets in the US. And that tells me that they're focusing on quality, focusing on certain companies, but really don't want to stay too much with the rest of the group. And that tells me that there is a little bit of nervousness still out there.
So how are you positioning your portfolio right now?
Yeah, at the moment, we're slightly underweight equities. We feel, again, that you want to be in certain areas that have the best downside protection still. Because I do think we're going to still head into a recession. Maybe not a long-lasting one, but definitely a short-lived one. But it still should be a recession that should see job losses continue, should see economic activity decline. And that still favors us to be a little bit more tilted towards Canada than the US, neutral on international markets, and slightly overweight on emerging markets.
What do you make of the fact that Canada has been lagging, if you are at least seeing perhaps some potential upside versus, say, the US market?
Yeah, well, what I would say is, Canada had a great run last year because of the energy boom, and energy, is being flip-flopping back and forth this year. I do like it still in the later part of this year when we get a full grown out movement in China, particularly because what we have seen so far is a slow and steady movement up, but not a really strong rebound back in the China market. And I think when that occurs, we'll see opportunities in energy pop up. The other part is I still think gold does quite well in this environment. And so once we start to see that pick back up again after pulling back more recently, I think you'll start to see money flow back into Canada. However, again, if we still continue to see this narrow breadth movement in markets that we're seeing, then that will favor the U.S. So we don't want to take too much out of the U.S. either, given that current situation that's going on.
It's still a holiday weekend south of the border, but it was a busy weekend in Washington. We mentioned the debt ceiling deal being reached. What was your reaction to that?
Yeah, it happened a little faster than I thought it would be. We were all expecting, I think, that the deal would eventually get done, though there were higher risks to this one than any other ones, given the current situation that's out there. That being said, it still has to be ratified, and I think that's still going to be a little bit of a challenging back and forth in the next few days, but I still believe we'll get this all ratified, and I think Janet Yellen said the deadline really isn't January 1st, it really is June 1st, it's June 5th. So that gives them a little bit more time. But what you've seen is you haven't really seen a massive movement in markets as a result of this. So I think everybody was expecting this to happen. But once you get past this, then the question then becomes, what's the next thing to move markets higher? Is it the pause? Maybe. But I don't think it's going to really be earnings, because earnings continue to be declining. So I don't see much upside from here. And that's why, we do have that little bit of underweight, because there's more potential risk on the downside than there is for the upside.
So let's dig into that for just a second. You referenced a pause. It's a story we're watching on both sides of the border. So both the Bank of Canada and the Fed are going to have interest rate decisions in June. The Bank of Canada had already been sitting on the sidelines, but after the most recent inflation data, some thought, well, maybe they're going to have to get off the sideline and hike rates again. In the U.S., the Fed has been reluctant to commit to a so-called pause so far, but now you've got a few different folks who think that would be the prudent course at this point, and not to raise rates. So, what are your expectations ultimately on what happens with rates in June in both countries?
Yeah, so I think in Canada, they'll remain on pause. I think in the U.S., it's more of a 50-50 here. I can see a rate hike and then a pause, or I can say a pause, but leaving the door open still for a rate hike later on. So I can see either one of those scenarios. To me, it's not really if we have one rate hike and then pause or pause now. I think the scenario is that markets want to see this eventual pause happening sooner rather than later. But also, the fact that people are anticipating a rate cut this year, I think that's the one that's going to be the one that they get wrong, because I don't see a rate cut happening both in Canada or in the United States, and the market is still expecting that. So that, to me, is the negative part of where the market is dislocated from where I think you're going to see the central banks.